Okay, a very good morning to all of you, and welcome back to CA Foundation lectures. Till now, we discussed some of the basics of accounting. Now, I'll start a new chapter as per your ICAI board material, Unit 5 in chapter number 1. Last 4 units are completed, but still there are some pending concepts are there. We'll discuss at the end of this total chapter of 1 as per your ICI material. Now, let us start a new concept today. Unit 5 in your study material of ICA Foundation, that is called Contingent Asset and Contingent Liabilities. Contingent Assets and Contingent Liabilities. Okay. Before that, we know that what is asset, what is liability. What is asset? We read the definition. Asset is owned by entity. It is a resource owned by entity which generates future profits, is called asset. We read the definition. After that, assets are two types: tangible assets, intangible assets. Tangible assets means which have physical existence, which can be seen, touched and felt. Intangible assets means which have no physical existence. Examples: goodwills, patent, trademark, copyright. All these kind of assets are intangible assets. Land and building, plant and machinery, furniture and fixtures, all these kind of assets are called tangible assets. After that, liability. Liability is a present obligation of the entity because of a past events. For example, we taken a loan from Bank of Baroda. That means in past we taken a loan, we took a loan. So now we have to pay interest. At the same time, we have to pay principal also in a kind of EMI or installments. So every month I have to pay some principal amount as well as interest amount. So that is my liability. You can take loans or debentures. You know the debentures? Debenture is like a share, but this is a debt instrument. So all this kind of debt instruments are loans are called liabilities. Now, our concept is not about assets and liabilities now. Our chapter name is Contingent Assets and Contingent Liabilities. Contingent Assets and Contingent Liabilities. The first one is Contingent Asset. Contingent asset is basically, generally assets will come under balance sheet right side. We can call asset side, all asset. But contingent asset will not come under asset side of balance sheet because that is not an asset to me. This is possible obligation. If you see the slide, a possible asset arises from the past events and their existence will be confirmed only occurrence or non-occurrence of one or more uncertain future events. If you observe the definition, arises from the past events, their existence will be confirmed on occurrence or non-occurrence of certain uncertain future events. Future lo zarige uncertain event తో కన్ఫర్మ్ అవుతుంది అసెట్ ఉంటుందా ఉండదా, ఎగ్జిస్టెన్స్ ఉంటుందా ఉండదా అని. సో దిస్ ఈజ్ పాసిబుల్ ఆబ్లిగేషన్, not present obligation. Sorry, possible asset, not present asset. For example, the best example is we purchased raw material from our supplier. From our supplier and we use that raw material in our production. After that, we realized whatever the raw material we are purchased from supplier are totally damaged raw material. Because of that raw material, our production is totally collapsed. Totally damaged. That means our output is completely spoiled because of the raw material supplied by the supplier. So because of him we lost a we lost a 20,000 rupees profit. At the same time we lost 50,000 rupees worth of wages, materials, all these kind of things. So because of him our loss is 70,000 rupees, our loss. So we filed a case against him in court of law. Case is going on. So we appointed one advocate, he appointed one advocate. So proceedings are going on. So the case is, we are filed a case against so and so supplier for loss of 70,000 rupees. I hope you are getting my point. If we win the case, we will get 70,000 from Mr. Supplier. If we lose the case, there is no need to receive or no need to pay to him. No need to receive from him. If we win the case, we will receive 70,000 from supplier. If we lose the case, we won't receive any kind of amount from supplier. If cases are going on, possibility is more to receive that cash. That means chances of winning the case is more. Then that 70,000 is called contingent asset. What is that? Contingent asset. That is not an asset as of now, because as on today I don't know whether I will receive or not. But if I win the case, I will receive 70,000. If I lose the case, I won't receive any kind of amount from supplier. If there is the chances of receiving 70,000 is more, possibility is more, then that 70,000 is my contingent asset. Even though asset word is there, but we can't write that contingent asset in our balance sheet. Okay. Let us discuss more detailed manner. Contingent asset may be defined as possible asset arises from the past events. What is the past event? Supplier of raw material supplied by the supplier. Raw material supplied by the supplier is the past event. Possibility of asset is there. Possible asset arises from the past events on occurrence or non-occurrence of one or more uncertain future events. అంటే ఒకవేళ మనం కేసు విన్ అయితే విల్ రిసీవ్, లూజ్ అయితే వి వోంట్ రిసీవ్. ఎగ్జాంపుల్ చూడండి. I claim that enterprise pursuing through legal process for an outcome is uncertain is contingent asset. We don't know, uncertain. There is no certainty. We may win or we may lose. If there is a possibility, then that is a contingent asset. As per this concept of prudence as well as present accounting standards, an enterprise should not recognize contingent asset. Okay? As per concept of prudence, enterprise should not recognize contingent asset. Prudence concept మీరు నేర్చుకుని ఉంటారు. Prudence concept ఏం చెప్తుందంటే, don't recognize any expected incomes but you can recognize your expected losses అని. So should not recognize any contingent asset. These assets are uncertain, may arise from a claim which an enterprise pursued through legal proceedings. We know that there is uncertainty in realization of claim. Yes, we may win or we may lose. It is possible that recognition of contingent asset may result in recognition of income may never be realized. For example, మనం ఆ 70,000 రూపీస్ని అసెట్గా మనం అకౌంట్స్లో కనుక రాసి ఉంటే కనుక ఫ్యూచర్లో రియలైజ్ అవ్వకపోతే అప్పుడు ఏమవుతుంది, బ్యాలెన్స్ షీట్లో రాంగ్ అసెట్ మనం ప్రొజెక్ట్ చేస్తున్నాం కదా. దట్ మీన్స్ వీఆర్ డూయింగ్ విండో డ్రెస్సింగ్. దట్ ఈజ్ నాట్ ఎట్ ఆల్ ఫెయిర్. So we should not recognize our contingent asset in my books of accounts. However, when the realization of income is virtually certain, then the related asset no longer remains contingent asset. For example, if uncertainty is removed and certainty comes over there, then that contingent asset converted into asset, in that case will record asset. ఓకే, అప్పుడు కంటింజెంట్ అనే ఈవెంట్ రిమూవ్ అయిపోతుంది, ఆ వర్డ్ రిమూవ్ అయిపోతుంది. One more important point, contingent asset need not be disclosed in financial statement. Contingent assets అకౌంట్ లో రికగ్నైజ్ చేయకూడదు. అట్ ది సేమ్ టైం నో నీడ్ ఆఫ్ ఎనీ డిస్క్లోజర్ ఇన్ అవర్ బుక్స్ ఆఫ్ అకౌంట్స్. రికగ్నిషన్ అక్కర్లేదు, డిస్క్లోజర్ కూడా అక్కర్లేదు. ఓకే, ఇంపార్టెంట్ పాయింట్. But a contingent asset is usually disclosed in report of approving authority. Approving authority అంటే ఎవరినన్నా? బోర్డ్ ఆఫ్ డైరెక్టర్స్ ఇన్ కేస్ ఆఫ్ కంపెనీ. బోర్డ్ ఆఫ్ డైరెక్టర్స్ రిపోర్ట్లో, బిఓడి రిపోర్ట్లో డిస్క్లోజ్ చేస్తారు కానీ ఫినాన్షియల్ స్టేట్మెంట్స్లో డిస్క్లోజ్ చేయరు ఇన్ కేస్ ఆఫ్ కంటింజెంట్ అసెట్. ద సమ్మరీ ఈస్ కంటింజెంట్ అసెట్ మీన్స్ ఏ పాసిబుల్ అసెట్ అరైజెస్ ఫ్రమ్ ది పాస్ట్ ఈవెంట్స్ అండ్ హూస్ ఎగ్జిస్టెన్స్ కన్ఫర్మ్డ్ ఓన్లీ ఆఫ్టర్ occurrence or non-occurrence of uncertain event, that too in future. Contingent asset no need to recognize in books of accounts. At the same time, no need to recognize in no need of disclosure in financial statement, but it should be disclosure in board of directors report in case of company or any other reporting authority in case of any other enterprises. Generally we can say contingent asset should be disclosed in reporting authority, in the report of approving authority. What is that? Approving authority report lo will disclose. Generally మన కంపెనీ అకౌంట్స్ లో కనుకైతే కంపెనీలో మనం board of directors are our approving authority. So in case of companies will disclose this matter in our board of directors report of board of directors. We can call BOD report, board of directors report. Contingent assets are assessed continuously. If it has become virtually certain that an inflow of economic benefits will arise, the asset and related incomes are recognized in the financial statement in the period of change occurs. So we will continuously assess this kind of, for example, in our example, that 70,000 will continuously assess. If that is certain, for example, judgment is passed in favor of us, so that 70,000 will receive, that is for sure. So as an judgment passed, or we can say as an certainty arises, then we'll record that 70,000 in our books of accounts. What is the reason? Uncertainty is removed, certainty is arises there. Okay, if that has become certain, then we'll record. That is all about contingent assets. Now, contingent liabilities. What is it? Contingent liabilities. Contingent asset and contingent liabilities are looks like same, but there is a small difference. Contingent asset means possible asset will receive in future, there is uncertainty. That means we may receive or we may not receive in future, that is contingent asset. But in contingent liability there is obligation. that is also uncertain. In this case also, existence of this liability will be confirmed only on occurrence or non-occurrence of certain future event. Okay, uncertain future event. Now see the definition. A possible obligation that arises from the past events and the existence of which will be confirmed only by on the occurrence or non-occurrence of one or more uncertain future events, not wholly within the control of enterprise. First point is a possible obligation that arises from the past events and existence of which will be confirmed only by occurrence or non-occurrence of one or more future uncertain events which are fully not in the control of enterprise. Let me take example for this concept also. We sold some goods to our customer. Let me take our business is a restaurant business. We sold some food to one of customer. After he had a lunch, he died because of our food. There is some poison in our food. Because of our food, he died. So, their family member filed a case against us. Because of so and so restaurant, my family member is dead. So, we need compensation from that restaurant. This is the case filed against us in court of law. ఇక్కడ ఇప్పుడు కేసు వాళ్ళు ఫైల్ చేస్తారు అగైనెస్ట్ అస్. ఏంటది కేసు? We need to pay compensation to that family. If judgment is passed against, if judgment passed in favor of us, no need to pay any amount. If judgment is passed against us, that means passed in favor of that family, we need to pay compensation to that family. That means if case wins, that family wins, we need to pay. This is also. That means in this case, if we lose the case, if he loses the case, no need to pay. If he wins the case, we need to pay. That means that uncertainty event is there. That outcome of uncertainty event in future will decide whether I have to pay compensation or no. That is contingent liability. Okay. Next one, present obligation arises from past events but is not recognized because present obligation arises from past events because it is not probable but an outflow of resources embodying economic benefits will be required to be settled that obligation or reliable estimate of amount of obligation cannot be made. Obligation అయితే ఉంది, present obligation, but మనకి we cannot estimate probable economic benefits and we cannot estimate reliable estimate and we cannot estimate amount ఎస్టిమేట్ చేయలేకపోతున్నాం, ఫ్యూచర్ ఎకనామిక్ బెనిఫిట్ అవుట్ఫ్లోని కూడా ఎస్టిమేట్ చేయలేకపోతున్నాం. ఆ కేసెస్లో కూడా సచ్ కైండ్ ఆఫ్ లయబిలిటీని కంటింజెంట్ లయబిలిటీస్ అంటారు. అవి కూడా మనం రికార్డ్ చేయం యాజ్ ఎ లయబిలిటీగా, వాటిని కంటింజెంట్ లయబిలిటీస్ అంటాం. Now see little more deep. Contingent liability is possible obligation arising from past events and may arise in future depending on the occurrence or non-occurrence of one or more future events. A contingent liability may also be present obligation arises from the past events. ప్రజెంట్ అప్లికేషన్ అవ్వచ్చు కొన్ని కేసెస్లో పాసిబుల్ అప్లికేషన్ అవ్వచ్చు. ఎప్పుడు ప్రజెంట్ అప్లికేషన్ అవుతుందంటే వెన్ దెర్ ఈజ్ it is not probable that an outflow of future economic benefits there is no probability. Second one, we are not able to estimate the amount. In that case also that is contingent liability. First case also contingent liability. Next paragraph. An enterprise should not recognize contingent liability in balance sheet. However, it is required to disclose in the notes to account unless possibility of outflow of resources embodying economic benefits is remote. If you remember, contingent assets no need to record in books of accounts. At the same time, no need to disclose in our financial statements, but contingent liability need to be disclosed in our financial statements, that is in notes to accounts. But in case of contingent asset, no need of record in financial statements and no need of disclosure also, but disclosure is required in approving authority report. But in case of contingent liability, we have to record, we have to disclose in our notes to accounts unless such amount is very remote. Remote means very less. These liabilities are assessed continually to determine whether an outflow of resources embedded economic benefit is probable. Okay. If it becomes probable that outflow or future economic benefit will be required of an item previously dealt with contingent liability, provision regarding financial statements. Yes. Please read this sentence. Be careful. If it become probable that outflow or future economic benefits will be required for an item previously dealt with a contingent liability. ఆ కంటింజెంట్ దట్ ఫ్యామిలీ పిన్ అవుతుందని మనకు తెలిసినప్పుడు, ప్రాబబిలిటీ వచ్చేసినప్పుడు, అప్పుడు మనం ప్రొవిజన్ రికార్డ్ చేయాలి ఇన్ మై బుక్స్ ఆఫ్ అకౌంట్ ఫర్ దట్ లయబిలిటీ. ఓకే. Except in, for example, there is no reliable estimate, we can't do anything. If there is any reliability, then we need to create provision in our books of accounts. Now see, distinction between contingent liabilities and liabilities. So difference between liabilities, contingent, simple. Liabilities is my present obligation, but contingent liability is a possible obligation sometimes, present obligation also sometimes. See, distinction between liability and contingent liability is generally based on judgment of management, depend upon the management judgment. Liability is defined as present, liability definition చూడండి నాన్న, present financial obligation of an enterprise which arises from past events important for MCQ. Liability is present obligation of an enterprise arising from past event. Settlement of liability result in outflow of enterprise resources embodying economic benefits. That means if we settle, if we want to pay any liability, then we need to pay some cash or assets. That means outflow of our economic benefits, resources. Okay. Contingent liability, either outflow of resources to settle obligation is not probable, or amount expected to be paid cannot be measured. Possible కొన్ని కేసెస్లో present. Examples: claims against enterprises not acknowledged as debts, guarantees given in respect of third parties, liability in respect of bills discounted and statutory liabilities. In addition to present obligations that are recognized liabilities in the balance sheet, enterprises are required to disclose. Yes, contingent liabilities disclose చేస్తాం, liabilities balance sheet లో రికార్డ్ చేస్తాం or recognize చేస్తాం. This is the difference between liabilities and contingent liabilities. Liabilities may present obligation, contingent liability is possible obligations sometimes, present obligations sometimes. ఎప్పుడు present obligations are అంటే when there is no probable of any economic benefits outflow. Second one, there is no we are not in a position to estimate reliable amount of that payment, then that is also contingent liability. Liabilities will record in our books of accounts. Contingent liabilities will disclose in our notes to accounts to balance sheet. Okay. Distinction between contingent liabilities and provisions. Important. Provisions means any amount written off or retained by way of providing for depreciation, renewal, diminution in the value of assets. Depreciation, renewal, diminution in the value of asset by way of providing any known liability which amount cannot be determined with substantial accuracy. Let's see table format, will get more clarity. Provision is present liability of uncertain amount which can be measured reliably by using substantial degree of estimation. Provision అనేది present obligation, but there is some uncertainty. సో మనం సబ్స్టాన్షియల్ డిగ్రీ ఆఫ్ ఎస్టిమేషన్ యూజ్ చేసి ఆ అమౌంట్ని ఎస్టిమేట్ చేసి రికార్డ్ చేస్తాం ఫర్ ఆబ్లిగేషన్, ఫర్ లైబిలిటీ, దట్ ఈస్ ప్రజెంట్ లైబిలిటీ, దట్ ఈస్ కాల్డ్ ప్రొవిజన్. Contingent liability, possible obligation may or may not arise on occurrence or non-occurrence of certain future events. Next, provision meets recognition criteria, that means will record in our books of accounts. Contingent liability fails to meet the same, that means contingent liability fails to meet recognition criteria, that means no need to record contingent liability in my books of accounts, but provisions need to be recorded in my books of accounts. Provisions meets the recognition criteria, so will record provision in my books of accounts. Liability is said provision for debtors, provision for bad debts, like this. But contingent liability fails to meet the criteria, so will not record in our books of accounts. That means we don't record in my liability side as contingent liability for so and so case. We don't record like this because it doesn't meet, that means it fails to meet a recognition criteria. Okay. Provision is recognized when an enterprise has present obligation arising from past event and outflow of resources is probable, and reliable estimate also can be made. Estimate ఉంటుంది, probability కూడా ఉంది, outflow of probability ఉంది, కాబట్టి will record provision for that amount. In case of contingent liability, there is no probability or cannot be estimated. In this cases, that is called contingent liability. In this case, this is called provision. Okay. If management estimates that it is probable that settlement of an obligation will result in outflow of economic benefits, to recognize provision in balance sheet. We know that. Ikkada likely that there is a chance. Read this sentence. If management estimates that it less likely that any economic benefits will outflow, the firm to settle the obligation discloses the obligation as contingent liability. Less likely, chances తక్కువ ఉన్నాయి. ఎగ్జాంపుల్ చూడండి. సెంట్రల్ ఎక్సైజ్ ఆఫీసర్ imposes a penalty on Alpha Limited for violation of సెంట్రల్ ఎక్సైజ్ యాక్ట్ వయోలేషన్ కోసం కొంత పెనాల్టీ లెవీ చేశారు సెంట్రల్ గవర్నమెంట్. కంపెనీ గోస్ టు an appel. Superb. If management of the company estimates it is probable that company will have to pay penalty, it recognizes the provision for liability. On other hand, the management anticipates that judgment of the appellate authority will be in its favor and less likely that company will have to pay. In that case, disclose as an contingent liability. Okay. This is the total chapter of contingent assets and contingent liability. So, contingent asset and contingent liabilities. So let's do some MCQs and true or false questions. Contingent, the true or false, question number 1. A contingent liability need not be disclosed in financial statements. Contingent liability disclose చేసిన అవసరం లేదంట, అవునా? No, false. Contingent liability should be disclosed in notes to accounts, in books of accounts of company. So that is false statement. Second one, provision fails to meet recognition criteria anta, avuna? Provision fail, contingent fail. Provision meets contingent recognition criteria. Provision meets recognition criteria. Contingent liability fails to meet recognition criteria. So this is false. If it is contingent liability, it may be true. Okay. A claim that an enterprise is pursuing through legal process, outcome is uncertain, is a contingent liability. Outcome is uncertain. ఇక్కడ చూస్తే we filed a case, we are pursuing through legal process. That means that is not liability, that is asset. Okay. Fourth one, but it is probable that firm will need to pay off obligation, it gives contingent liability. Probable, not possible, that is liability. If it is when it is probable that firm will need to pay off obligation, it gives rise to provision, not contingent liability. Why we record contingent liability? Because of there is uncertainty in the event. Here probability arises, then we need to create provision. Present financial obligation of an enterprise which arises from the past event is termed as Contingent liabilities. No, this is called liability. Yes, present obligation arises from past events is liability. That is possible obligation. Let us do MCQs. See question number 1. Contingent asset usually arises from unplanned or unexpected events that give rise to contingent liability na asset. So option A, possibility of an inflow, option B, possibility of an outflow, A or B. What is that? Asset? No, so inflow. Question number 2, if an inflow of economic benefit is probable, then contingent asset is disclosed. Inflow of economic benefit is probable. That means contingent asset ఎక్కడ డిస్క్లోజ్ చేయాలి? కంటింజెంట్ అసెట్ ఫైనాన్షియల్ స్టేట్మెంట్ డిస్క్లోజ్ చేయాలా? నో, వీ నీడ్ టు డిస్క్లోజ్ ఇన్ రిపోర్ట్ ఆఫ్ అప్రూవింగ్ అథారిటీ. నెక్స్ట్ వన్, ఇన్ కేస్ ఆఫ్ డాష్ either outflow of resources to settle the obligation is not probable or amount is cannot be measured, that is also contingent liability. This is present obligation. Next one, present liability of uncertain amount which can be measured reliably by using substantial degree of estimate is termed as provision. Fourth one here you can see here. Yes, with proper substantial degree of estimation will measure, that is called provision. In financial statements, contingent liability is recognized, adjusted, not recognized. What is the answer? Not recognized, it should be disclosed. Fifth one, B. Yes. Theoretical questions, differentiate between provision and contingent liability, liability and contingent liability. Very simple, we discuss, just see the answer. Provision is a present liability of uncertain amount which can be measured by using substantial degree of estimation. On the other hand, contingent liability is possible obligation that may or may not happen depending upon the occurrence or non-occurrence of one or more uncertain future events. Next, liability versus contingent liability. Liability is present obligation, contingent liability is possible obligation. This is the total chapter of contingent asset and contingent liability. Very simple. Just after completion of this video, once again watch this 40 minutes video and open your board material. Once again go through that material, you will get full clarity, no doubt in that. We discussed in very detailed manner contingent asset, contingent liability, and we discussed some MCQs, some true or false. The major concepts here are contingent asset, contingent liabilities, provisions, and liabilities and assets. Okay, I hope you understood clearly. Before you going to start your preparation, once again go through this video and go through your study material. Okay, then you can do some other MCQs also. Okay, before you start your preparation, please watch this video once again. You will get full clarity. Okay, we'll meet in the next video. Thank you, bye, take care. In next video we'll start another unit. I hope that is called accounting policies, if I am not wrong. If yes, accounting policies, this is our next class, unit 6 in your ICAI study material of CA foundation. Okay, let's meet in next video. Bye, take care.